Hello and welcome back to Explain the Charts, your go-to channel for detailed market analysis. Today is November 13th, 2025, and we are focusing on the US dollar versus the Swiss franc, or USDCHF. There is a tremendous amount of news driving this pair right now, creating significant volatility and opportunity. The biggest story is the rising hope for a major trade deal between the US and Switzerland. Reports from multiple sources suggest talks are constructive and an agreement could be reached within 2 weeks. This deal would potentially see the U.S. lower tariffs on Swiss goods from a hefty 39% down to around 15%. Naturally, this is fundamentally very bullish for the Swiss franc and therefore bearish for the USDCHF pair. Simultaneously, the U.S. dollar is facing its own set of pressures. The U.S. Senate has approved a bill to extend federal funding, avoiding a government shutdown for now, which has brought some stability. However, the Federal Reserve is sending mixed signals regarding monetary policy. Some Fed officials are expressing caution about further rate cuts due to inflation, while others are keeping an open mind. Markets are currently pricing in a high probability of another rate cut in December, which generally weakens the dollar. On the other side, the Swiss National Bank has maintained a dovish stance, but ruled out a return to negative interest rates, providing a floor for the franc. Now, let's see how this powerful fundamental backdrop is reflected in the price action on our charts. Looking at the daily chart, the long-term trend is undeniably bearish. The pair has fallen dramatically from its year-to-date high near 0.9200 back in January. We can see a multi-month downtrend, punctuated by periods of consolidation and failed rallies. More recently, the price rallied from a low in late September around 0.7858 to a peak just last week. Specifically, on November 4th, it hit a high of 0.8108, which news reports confirm was part of a 6-day winning streak. However, that rally has completely reversed, and the reversal aligns perfectly with the escalating news about the potential tariff deal. This sharp downturn from above 0.8100 confirms that sellers have taken overwhelming control. The last 3 daily candles are large and red, showing strong bearish momentum. Yesterday's close was 0.79779, a significant break below the psychological 0.8000 level. Technical analysts have pointed out bearish patterns like an evening star reversal forming at last week's peak. This suggests the recent rally was merely a correction in a larger downtrend, and the primary bearish trend has resumed. The price has decisively broken below what was once a key support area between 0.8071 and 0.8076. This zone should now be considered a major area of resistance on any potential pullbacks. Let's switch to the 1-hour chart to analyze this recent decline more closely. Here we can see the anatomy of the crash from the 0.8100 area starting around November 5th. The selling pressure has been relentless with very shallow pullbacks, which is characteristic of a strong, news-driven trend. News reports mentioned a break of the 200-hour moving average, which was around 0.8056. That break was a key technical signal that confirmed the shift in short-term momentum from bullish to bearish. The price sliced through the 0.8050 level and didn't look back. Currently, the price is consolidating in a tight range, just below the 0.8000 mark. This consolidation after a sharp drop is typical, as the market digests the recent move. The key question now is whether this is a pause before the next leg down or the beginning of a short-term bounce. For now, any bounce towards the 0.8040 to 0.8060 area will likely be met with significant selling pressure from traders who missed the initial move. Now, zooming all the way into the 15-minute chart for the most recent price action. Over the last 24 hours, we can see a clear downtrend with lower highs and lower lows. The price fell from around 0.8050 on November 11th down to the current levels below 0.7980. The moves are methodical, showing consistent selling pressure during active trading hours. There is a minor support level forming around the 0.7965 area, which was the low of yesterday's session. A break below this intraday low would likely signal the continuation of the sell-off. Conversely, if buyers can push the price back above 0.8010 on this timeframe, it might trigger a small short squeeze, but the overhead resistance is substantial. The very short-term price action is bearishly biased, reflecting the sentiment on the higher timeframes. Let's return to the daily chart to recap and discuss the outlook. The fundamental picture and the technical picture are strongly aligned, which gives us a high-conviction view. The potential for a US-Swiss trade deal is a powerful catalyst strengthening the franc and pushing USDCHF lower. Let's summarize the key price levels to watch. Immediate resistance is at the psychological 0.8000 level. Stronger resistance sits at the broken support zone between 0.8050 and 0.8071. Any move back to that area would be a prime location to watch for a bearish reaction. The key resistance that would negate the current bearish outlook is a break back above the November high of 0.8117. On the downside, immediate support is weak. The low from yesterday around 0.7964 is the first level to watch. Technical analysis from multiple sources points to the next major support target at 0.7860. Below that, the next significant psychological level is 0.7800. So, what is the most likely scenario? The bearish case seems highly probable. I would assign it a 75% likelihood. This is driven by the powerful trade deal narrative. A confirmation of this bias would be a sustained break below 0.7950. The bullish case, with a 25% likelihood, would require the trade deal to completely fall apart and for the US Fed to make a surprisingly hawkish pivot, both of which seem unlikely at this moment. The first signal for a potential bullish reversal would be reclaiming the 0.8071 resistance level. The most important thing to watch for in the coming days is any official announcement regarding the US-Swiss trade negotiations. That will be the primary driver for this pair's next major move. Thank you for watching this analysis on Explain the Charts. Please remember, this content is for informational purposes only and is not financial advice. Always conduct your own research and analysis before making any investment decisions.